Part of the rise in oil that we're seeing is actually due to heightened uncertainty. We're in a period of really extreme volatility in the oil market. I mean, just look at the moves, the price moves we've seen this week. We saw down by 25%, now up by 8 or 9%. And there are just so many factors that are influencing the market that are just so uncertain now. And a lot of them don't even necessarily have to do with the fundamentals. I mean, we do have this report from the IEA saying that as soon as next month, we could see 3 million barrels a day of crude oil and products from Russia coming off the market. And that's quite a bit of oil, and that's quite a significant amount, and it's more than was expected. And some of the reason has to do with the fact that Russia doesn't have a lot of storage capacity for its products and for its oil. So if it can't export these products, then they fear they'll be forced to basically shut in production. Now, Russia is saying, no, that's not going to happen. And other places are saying, well, we don't expect it to be that much. But there's so much uncertainty that it's not surprising that we saw such a price jump.
Indeed, uncertainty, price jumps, volatility. I guess let's get right to that word. I mean, recently we've had oil up as high as almost 140, 139, as low as about 98, dipping below 100, right? That's a $40 band. And a lot of people are saying, look, I can't trade a market like this, which takes them out of play, which makes the market even thinner and leads to even higher volatility. I mean, this is a vicious cycle.
Exactly. And then we have all of this talk about potentially trading oil in currencies other than the dollar. You were just speaking about India wanting to do trades in rupees to rubles. We've got the Saudis now saying they're investigating a petro yuan contract, and all of that adds more volatility. I don't think that either of these are a really significant move away from the petrodollar. I don't think that the petrodollar is really being threatened, but they definitely introduce more elements of instability into the market. And we are seeing, the market today is so financialized. It so much relies on, there's a lot of speculative movement to begin with. And I do think that speaks somewhat to OPEC's point, which they were making earlier this month, saying, look, a lot of the rise that we saw in oil, the huge rise up to almost 140, is due to geopolitical factors and uncertainty and not necessarily supply and demand. So if we go in and we start, adding barrels, we may not see the desired effect. But I do think that they're going to be under a lot of pressure when they meet March 31st.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.